what led to that decision to go from general purpose to a stack?
They're trying to build their own kingdoms and take away from Ethereum. What's your response to that?
What's the biggest L2 for using Arbitrum?
The point is, it doesn't matter, right? Because like the gaming fund doesn't care about transactions.
Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.global and remember to follow @safe on X. GM. What's up, guys? We are here with two of the, not just two, but three of the Rollup clusters that are absolutely defining the game here. We have AJ Warner, we have Ryan Wyatt, and we have Jill, the lovely Jill from Espresso, to bring us here to talk about something that, I think flies under the radar a little bit. As much as Optimism and Arbitrum have gone under the microscope when it comes to tech and sequencers and incentives and tokens and all this good stuff, we don't talk a lot about the business models and the licensing models. And so Jill's thread, I'm sure we'll pop it up on the screen, the fork in the road, is what brought us here today to talk about some of the divergences and maybe some of the ways that Optimism and Arbitrum are similar in this regard as well. And so, Jill, you've been on the show. I think you're going to be helping me moderate and co-host today. So appreciate you doing that. Jill, maybe you could kind of, before we kick it off to AJ and Ryan for some intros, maybe Jill, you could kind of fill us in on, the inspiration for why you wrote that thread, and then ultimately, why you felt it was important that we have this conversation.
Yeah, absolutely. Thanks for letting me butt in here. Thanks for letting me co-host, Robbie. And it's great to be able to have this conversation. I think I'm going to learn a lot as well. So I'm one of the co-founders at Espresso Systems. We're building infrastructure that's used primarily by rollups, but can be used by any chain for improved interop and composability. We've variously been called a shared sequencer, a confirmation layer. We're working with rollup teams that are using us for all of the above and also for DA. That means that I spend most of my day talking to rollup teams at various stages of development in both the OP ecosystem, the Arbitrum ecosystem, and a lot of the other ecosystems out there as well. And so I get to have kind of the front lines of what their decision-making process looks like. And as you said, a lot of that does come down to the tech, but a lot of the conversations I have with them as well also come down to longer-term business model considerations, distribution considerations, the type of support they expect to get from each of these ecosystems. And that's what prompted me to write the initial thread, which I'm sure we'll link in the show notes, that was trying to cast some light just on what these considerations look like. Now, again, I'm someone who is, spending a lot of my day on these types of topics. And even I got some things wrong in that thread. And so, again, hopefully I'll learn some things, and hopefully the audience tuning in here will learn some things as we go as well.
Amazing. That's the goal, is to learn something here. I hope everyone takes away something here that they've learned. And so, yeah, AJ, Ryan, appreciate you guys coming on from the Arbitrum and the Optimism Foundation, respectively. And yeah, because it's your first time on the show, each of you guys would appreciate an intro. Maybe we'll just go in alphabetical order. AJ, why don't you kick us off?
Sure. Thanks so much for having us on, Robbie. Appreciate it. It's going to be a ton of fun. And Jill for co-hosting. It's always a pleasure to hang out with you as well. So really excited for this. One, just quick clarification. So I don't work at the Arbitrum Foundation. I work at Offchain Labs, which is like core developers within the Arbitrum tech stack, but I'm quite familiar. So obviously talking to personal capacity, not on behalf of the DAO, but a little bit about me. I've been at Offchain Labs for a little more than 4 years now, building out the ecosystem since before the original Arbitrum alpha testnet. Been a hell of a journey, a ton of fun working with builders across, apps, infrastructure, scalability, etc. And I'm really excited for this conversation. I'm sure I'm going to learn a lot about the optimism business model. Like, Ryan was saying before we got on, we're all kind of iterating as we continue to move. So this should be a lot of fun.
I'm Ryan. Thanks for having me on. I'm excited to be here. This is fun. Jill, thanks for making it happen. I've been at Optimism Foundation for a year. I'm our Chief Growth Officer. So, looking after kind of our broader business.
Awesome. Cool, guys. That sounds great. Let's get into it. There's a lot of similarities and a lot of differences here between Optimism and Arbitrum, two of the most prominent rollups in the space, both of them based on Ethereum, inheriting Ethereum's L1 confidence, and then ultimately scaling Ethereum, as well as the blockchain space in general. You guys have two very different brands, have been kind of known for two different things. And so I think that's been part of that's been a factor in both of these rollups flourishing in their own right. And so I think one of the similarities here that we have is both of you guys started out as your own general purpose rollup. We had Arbitrum launch Arbitrum 1. We had Optimism launch the OP mainnet. And then eventually these evolved into each of you guys have your own stack. We have Arbitrum Orbit and all of its components. We have the OP stack and the Superchain, and we have a lot of buy-in from L2s into the Superchain. And so the open question here for whoever would like to go first is, what influenced the decision? What inspired you guys to make the transition to go from general purpose rollup into a stack that allows anyone and everyone to go in, deploy your rollup, be opt-in to a part of this Superchain or this Arbitrum Orbit ecosystem? What led to that decision to go from general purpose to a stack?
Yeah, I can jump in. I think the big fork in the road for both Arbitrum and Optimism, for us was realizing that, one single blockchain isn't going to scale Ethereum, and that we wanted to really go towards what does horizontal scaling look like. So that was really the bedrock upgrade, removing thousands of lines of code to make it as, equivalent as possible, to make it really easy to build. Our philosophy was, how do we get other L2s to build using the OP stack? And that was a big change in direction for Optimism. And obviously the base deal, which I have no doubt we'll talk about and cover at some point, was a big part of the first step in that direction of, are there other L2s that want to launch? Do they believe in this idea of horizontal scaling? Are they going to be okay with operating under a very specific configuration of the OP stack in order to achieve interoperability? I mean, there's like a lot of things in there that were big jumps, like if you look at positioning, on the other side, like an Arbitrum, it's like, hey, you can customize everything, you can do anything you want. There is like a shared standard that people have to adhere to. It does actually have limitations in what you can do, and coming together to say, what are those limitations? How do we get through them? How do we build together and align on them is really important. So like you look at Unichain, fast block times was a big thing for them, right? Like, so all of a sudden Uni is going to be, helping the OP stack upstream all of these different changes, and then everybody benefits from it across the stack. And so it's been a really different way of thinking about it. I think if you look at kind of Arbitrum has done like an incredible job with like the L3 ecosystem and other alternative way of scaling, even L3 is like Orbit settling to base. And yes, you could be an OP stack chain and do the same, but predominantly OP stack is largely used for L2s, and that's like our focus. Our focus is, how do we horizontally scale? How do we get a lot of players that want to have their own L2 to deploy an OP stack? All the different RAS providers supporting OP stack so that people can just like up and run and get going. And so that's what we're offering. And some of the limitations, the benefits are, we can offer shared security. We can offer shared upgrades. We can offer these folks a path to stage 1 and inevitably stage 2. And so we think, we're getting there. So there's like a unique value prop that's really starting to, to pop up. And our focus has been L2s, like we're not ever from a foundation perspective, and even from like the DAO and the grants counts and all that, there isn't really a focus on L3s. And so I've actually seen this really interesting, there's like the competitiveness between, Optimism and Arbitrum, because I think there's a long standing, that relationship has looked. But to be honest with you, I think the dynamic has changed drastically. And it's been cool to see how like we're all starting to talk together about how do we have broader interop outside of these clusters and some of these bigger conversations. So that long-winded, that was kind of the big change was like, we're much bigger than one chain. We need to focus on how we build a broader ecosystem to scale Ethereum. And that was kind of the route that Optimism chose to take. And this was about 2 years ago.
Yeah, that's pretty good context. I think from the Arbitrum side, the evolution's been a little bit different. So it's funny. The original version of Arbitrum, if you look back at the Arbitrum white papers, was many deployments of Arbitrum. Like people would open an Arbitrum instance and close it when they finished what they wanted to do, and open another Arbitrum instance and close it. And we quickly realized that there wasn't product market fit for like a system like that. And then it evolved into sort of like the original Arbitrum chain, which was Arbitrum 1. But even if you look at like, and I think, Ryan made a good point in pointing out like sort of the differences in how we're thinking about scaling. People kind of forget because like, with sort of 4844 and Orbit's launching, like it hasn't, sort of found its prominence in the same way. But like we launched Arbitrum Nova almost 3 years ago at this point. And that was like a second Arbitrum chain already. And the vision wasn't to have like a second chain and kind of stop there. We recognized, I would say, with Nova when we launched AnyTrust, which was like the original Alt-DA form of Arbitrum, that there's going to be people who want to scale and they're going to want to be able to make parameter changes that match their business use case, right? So like when Ryan's talking about like in the OP stack uniformity and the shared security, and he rightfully pointed out there are trade-offs to that. I think Arbitrum's taken a very different philosophical decision that if you're launching a chain, it's a part of your product, it's a part of your application, it's the whole thing, and you want all of these things to match that, right? So for example, when we launched sort of the Orbit SDK, one of the things that we really prioritized were like, obviously people are free to customize it however they want. But like out of the box, like things like custom gas fee tokens, because we're seeing that like a lot of game use cases in particular want their native token used. We're going to start seeing some consumer chains want like stable coins like USDC just being like the custom gas token. So things like that, things like, what DA are you using, right? Like AnyTrust is really good if you are extremely cost sensitive to like sort of L1 blob fee increases, for example, right? And being an L3 versus an L2 can sort of depend on like your architecture. So like our kind of thesis on this has been like, how do we allow the Rollup to be a part of the decision making at the product level, right? There's definitely trade-offs between like what Ryan was describing around like interoperability and shared security and what we're doing. And I think like Ryan's right, we're taking different paths. I think that what I like about the Arbitrum path is that it allows the developers and builders to continue to innovate at the stack level. And we're seeing that become like more and more important as like block space is abundant, right? There's no like limitation of block space right now. So I almost like to call it like opinionated block space. If you're creating more block space, it should have a reason to exist. And allowing teams to be able to customize it to match what they're trying to build at the application level, for us felt like the most logical way to do that. So yeah, kind of always like the vision to have it. I think one of the differences maybe also is like, and Ryan, you can correct me if I'm wrong, obviously, is probably like the role of like our main chains within the ecosystem, right? Like Arbitrum 1 is like in many ways, I would say like a hub. In the same, like, in OP, I feel like maybe Base is that hub, or maybe there's multiple hubs. Like I think it's like a very different model instead of like hub and spoke. It's, I think you guys often show this as like a circle. So I think that's also a little bit of a difference in terms of like the central role of like the core public chain as part of this broader ecosystem.
Yeah, no, I'll say there's probably two things to comment on. I think the thing about customization is you can MIT open license OP stack. So people are forking it, a bunch of different chains doing all different kind of crazy fun things. Look at what Succinct is doing. What they're doing with custom gas tokens. Our goal is saying, is there demand for this? As people experiment, as they fork it, and can we upstream this into our standard configuration? Do we want to bring this into actually a standard config? So we kind of feel like we're getting the best of both worlds, where we're adhering to a very like it is a very strict shared standard that we have over here. But by having MIT open license where anybody can go run with it, they can go do anything with it. You've got Blast that's on OP Stack. You can go do all these different things. We're seeing where there's actual demand, and we do want to meet that demand within the shared standard. So, I think there is a path where we can at least still observe what people want in the stack, how they're utilizing it, and how we can upstream those configurations to make it part of the shared standard. The other thing is, the hub. I kind of, when you look at Arbitrum as more like vertical, right? Everything needs to come down to this main hub where there's a bunch of liquidity and a bunch of TVL that Arbitrum has. When we look at what is our success metrics when we look at optimism, we're looking at the Superchain, right? So how much TVL is across the Superchain? How much stablecoin percentage? What is liquid staking and restaking? How's DeFi look across it? How's gaming look across it? And we look at all of the chains as our children. And in fact, we make sure to not bias towards OP mainnet at all, right? And so when we're doing, grants council and our governance programs, they're looking at how are you driving contribution across the super chain. There's two reasons why. Obviously generating sequencer revenue comes back, to the collective. Sequencer revenue is going to continue to decrease, at least for now, while, we're increasing gas targets and gas limits, transactions are getting cheaper. And obviously the hope is, we start the 100x as an industry, how many transactions are coming in, and you start to see that actually spike back up long term. The other thing is Interop. Our goal with the shared standard and what we'll launch this year, actually 2025, is starting to actually make Superchain and Interop a real thing. Superchain means a lot of things to a lot of different people. Interop is one of the very tangible things that we need to make a reality. And so starting to connect 2 or 3 chains in 2025 where they have seamless Interop will be a whole new experience for application developers. There's an opportunity to monetize Interop long term. And so, I think we're just we're at a place where the health of the ecosystem is the Optimism collective. And we need to focus on all of that. There's downsides of that. What if somebody leaves the super chain? What if they depart? How does that look, right? Those are acceptable risks, because I think in the long term, you have to build something that's very compelling that people want to opt into, that want to pay fees, right? You offer a free version of OP Stack. You don't have to talk to anybody. You can go launch it. You go do whatever the hell you want. So it is abundantly clear that if they're going to pay revenue to the collective, what are you valuing right now? In the short term, it's very clear. There's incentives. There's just network effects. There's overall. Of course, we're in growth stage, all of us. This is a very small industry. There's not many users on any of the chains. When we talk about who's winning, nobody's winning. Nobody has any users. It's very small right now, right? So we're actually trying to get where we want to go. We got a long way to go. And so we're optimizing for growth over the next 2, 3, 4 years. But obviously at some point, that needs to turn into something very real. So that's what we're focusing on right now.
Ryan, Can we unpack a little bit more? Just optimism is many different things, right? You have the OP Stack, which, as you mentioned, I understand is MIT license, which for the audience is kind of the gold standard of open source, right? Fully free and open. Anyone can take it, run with it, use it for whatever they want, build off of it, monetize it in any way they want. Then you have the Superchain, which my impression, as I understand it, is kind of the core business, if you will, of what you're all doing at OP Labs on the foundation side. And when it comes to the Superchain, as you mentioned kind of at the top of the episode, there are these limitations, or at least shared standards, that are expected of the builders within the Superchain. And some of those standards have to do with commercials of how they're sharing revenue back to the overall kind of ecosystem and the parents. Some of them are more technical in terms of what changes to the stack they're upstreaming and what they can do. Can you talk a little bit about the interplay between those two things, and I guess either validate or invalidate whether I'm right in saying kind of the Superchain is more the business model, and then the OP Stack is, yes, kind of the open source technology side of it?
No, you're pretty much right. The way you think about it is if you're a chain operator, there's 2 journeys you could take. You just fork OP Stack. It's you can go do whatever you want. Blast is a great example of that. They don't pay any fees to the collective. They utilize the OP Stack. They run their chain that way, right? It's a perfect example of that path. And then you have the OP Stack where I'm going to adhere to these shared standards. I don't know that I would necessarily, there are limitations and customizations, but I don't know that they're limiting any of the partners, right? as far as what they want to do and what they're trying to accomplish.
Yeah, I guess
and
that's
that
more of
is
a
you.
theoretical statement. Like theoretically,
Yeah.
it can be viewed that way, but I don't know that
And
that's
it's true, right? Like the thing about the Superchain is there are customizations to the stack that you cannot make because you will deviate from the ability to have interoperability in the way that we want to do it, right? And so that like if you make a technical trade-off, that's really what you're trading off against. And so contributing sequencer revenues across the board, it's the same for everybody. It's 15%. And that's consistent. Ultimately, long term, the DAO and governance will vote for what those fees are. Chain operators have tokens; they will be part of those discussions. Like a lot of people will have, a say and thought process around what that looks like long term. But that's what it is today. It's consistent across the board. Why do you opt in and why would you pay that today? Is because of this network effects. Is because of incentives that exist today, right? We have retro funding where we fund projects that are contributing to growing the optimism ecosystem, right? We set out parameters of what those projects look like. We've gotten better in what the reward mechanism is. Like there's been a lot of good feedback and we want it to be more of like a continuous drip of, rewarding developers as they're contributing to the stack and the broader optimism ecosystem. And so if you're like a builder on Base, or Unichain or Sony or any of these chains, you'll benefit from that. So yeah, that's kind of what we're trying to orient towards and focus towards, and continue to build a real value prop long term where people are comfortable doing that. Ultimately, it's going to have to be Interop that I think will make it a very unique offering, because when you decide as like in a future state, imagine like a year, 2 years from now, you want to be an L2 and you want to create a network or a chain. It's like you want to be a part of that network where it already has liquidity, it already has users, it already has builders, and you can just like instantly plug into it. And that is worth the fee that you pay to be a part of the Superchain versus just deploying an OP stack, fork to what we call, which is using the MIT open license.
Yeah, just if I can jump in, because I have a couple of thoughts on this, because I spent a lot of time sort of trying to like make sure I fully understand the business as we think through Arbitrum. So I think the mental model that I have is, and some of sort of maybe the challenges that I think about the business is that like the Optimism Collective or DAO or whatever you guys call it, it's like primarily turning into like interoperability as a service and like governance as a service. And like the OP stack creates a ton of value, but it doesn't inherently capture that value, right? It's like what you were saying about Blast, right? Like you've enabled Blast to be able to launch a chain, which is like, I guess, good for society, I guess, right? But like in terms of like how you capture it, it's not like, I think we both agree probably like maybe there's a capture. I'm not really sure. I don't think
there's zero value capture from Blast, right? I think the MIT open license is more of like an ethos that we want to abide by and
right,
and
exactly.
focus on.
Yeah, which is I think totally noble, to be clear. So, but then when where I kind of sort of it breaks down, and I'm curious for your thoughts. Like when I think about this, is like, all right, so now we obviously have to capture, right? Because you can't in perpetuity just create value without capturing value. The way you do that is you have these other chains joining the Superchain. And the thing that it kind of always struggled with, right? Like obviously, like today, the interoperability is not live yet, so like it's it's like it's a new conversation, but it will come. Like the two challenges that I have is like how do you get to a place where, and like you mentioned already, like right now, like technically the collective is losing money because like it's giving out grants that are larger than the revenue that it's receiving, but the theory
all chains are all ecosystems are in that boat, right?
100%.
Yeah.
The theory is that like we'll build the network effects where eventually, right? So if we give $10, they're going to give back 20, but they'll be fine giving back 20 because of the interoperability. The sort of the challenge that I see is like the biggest chains, the ones that will have like the most ability to contribute profit, are like the ones that are like least in need of the interoperability as a service, right?
Oh, that's interesting. I don't know that that's like universally agreed when talking to.
This is my thesis. Debate this, and then the second one is like if we're having Ethereum interoperability, does that dilute like within the Superchain interoperability, right? So like as we all come together, and try and solve like what does Ethereum interoperability look like. The question is like from not like a value capture perspective, from a value not from a value creation perspective, but from a value capture perspective, like does that get diluted? Because that's
You mean cross-cluster interop, AJ?
I just mean all of Ethereum interop, right? So like if we're gonna have Ethereum, Polygon, ZK Sync, all of us are coming together.
Everybody's solving interop.
Right. If we're all gonna try and do this together, right, which I think is like really the ultimate like North Star, how does that like dilute the value proposition of like Superchain interop or Orbit interop? And like it's one of the reasons we haven't we are thinking about interop within Arbitrum, but it hasn't been like as central of a priority because we think we need to solve it across all of Ethereum.
Yeah, I think the interop for the Superchain cluster, there will still be clusters in my mind. Like, I think it'll be sick to see like egg layer plug into stuff. I think Ethereum will help. And this is really about bridging assets across the ecosystem. We're talking about like sub 1 second latency interop. So like application developers deploying across the Superchain will have a unique offering than what any of these services have been offering. Like, I think it's not binary. I think we'll work with both. And I don't think it'll dilute the value of Superchain interop. And obviously, like now we start to be hypothetical. If Ethereum solves in like, what does a year, 2 years, 3 years look like? You know, we've been talking about egg layer for years. We've been talking about Superchain for years. These are like very complex problems to solve. So I don't know. It gets a little, and if we were sitting here 18 months ago talking about what the future looks like, we would have a completely different opinion. It's hard to think too long term of like, what does 3 years look like in some of these problems getting solved? We obviously are trying to place some bets like, what does ZK proofs do for us? How is that actually going to unlock like a lot of our like horizontal scaling challenges? So I think interop is actually going to be really important, even if it is solved to some degree through Ethereum, if it's solved some degree through egg layer, if it's solved, some degree through Superchain. And a lot of it too isn't just interop is a core value prop, no doubt. But I think people being a part of like the shared upgrades, the shared security, the advancement of the stack. I mean, this stack, I believe in 18 to 24 months will be far advanced than any other chain or tech stack because you've got protocol engineers from Coinbase, from Kraken, from Uniswap, from OP Labs, all contributing to this stack and advancing it. So, hard to say what 2 years looks like. I think nobody really has a crystal ball, but yeah, I think we believe that these are value props and we'll have to pivot. Sequencer revenue going down created a pivot of like what other value props you're going to do. There will be like a million between now and what you're talking about being a reality that we're going to have to contemplate, which is just the nature of this space. So yeah, I think they're fair points. I think what you're saying, you're like things we talk about internally all the time, things that we have to be like very cautious about as we build it. But I think we're pretty confident in the approach that we're starting to get, dialed in on. And that could change, like it changed a year and a half ago, 2 years ago when we're like, oh, OP mainnet. That's going to be our focus. We're going to be this unique L2 offering. And look how quick, like how long did that last? Look at even from my time at Polygon, where it was like, we're going to grow this POS chain. We're going to be really big. ZKVM is going to be the future. Look how that turned out. Then it's like egg layer pivot. So like, who knows where Arbitrum pivots in 18 months or optimism.
It's kind of the fun of building in this space, right? We're all just making it go along. Yeah. I do think that there is something that you're touching upon here that's important, which is that every different ecosystem, and even within that ecosystem, I think every different builder has a different vision for what interop ends up looking like on a 1 year time horizon, on a 5 year time horizon. You've got this kind of position that we're always going to have clusters. Clusters are always going to matter. And within, whether it's the Superchain cluster, the Orbit cluster, the ZK Sync Elastic chain, or whatever it is, you're going to have a different degree of composability and interop versus across clusters and across the larger Ethereum ecosystem. I think then you've also got a lot of people building, myself, I'm in this camp, saying that's never going to be good enough. So we've got to work to solve cross Ethereum, cross cluster interop. I feel like from my conversations, I've noticed within the Arbitrum ecosystem, there seems to be more folks kind of in that camp, maybe dreaming about that future versus maybe I would give credit to some of the folks in the Superchain, maybe being very pragmatic and a little bit more near-term oriented about what's realistic in, the next 1 year kind of time horizon. But AJ, I'm curious to kind of turn the microscope on the Arbitrum ecosystem, because I think that there's been some evolution of business model there. Candidly, you guys have caught some flack, I would say, for not meeting what other people see as the gold standard of MIT open source licensing so that anyone can come along and launch an L2. And I haven't actually talked to you about this, but I think that there's been some evolution, maybe based on some of that feedback, maybe based on other feedback that you've gotten, but maybe you can talk us through that.
Redstone modular oracles are available on 50 plus chains, trusted by over 100 clients and over 6 billion in total value secured. Visit redstone.finance to find out more. Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fraxtal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fraxtal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fraxtal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fraxtal mainnet. Bridge your tokens and bring your Frax assets into the Fraxtal ecosystem. Join today to get the best out of Fraxtal. You are still early. Join today. Take part in our expedition into the singularity.
Yeah, I think like a lot of this comes down to, I think, the fundamental philosophies of the business and the business risk, right? So like Ryan said, like OP MIT licensed value creation, very light on value capture, but then having a mechanism like the Superchain for like building a business and value capture. And I think the philosophy within the Arbitrum ecosystem is we've built this like incredible tech stack that has a ton of demand. Like Ryan was talking about, like the 250 millisecond block space times that like Uniswap wants. We've had those for like 3 years. We already have people at 100 millisecond block times, like iterating for like derivatives and stuff. So we've got this great stack with Stylus now. You can use Rust, C, C++, like really like a good stack for developers to build. And that is what we're good at. That is what Arbitrum ecosystem is good at. That is like the main value proposition of what Arbitrum ecosystem has to offer, which is a very good technology stack. And we think that, again, and it goes against sort of maybe the core MIT license philosophies, is if you're good at building something, that's the thing that you should be selling, right? And of course, we want to be in an ecosystem and an environment where people have access to the code, they can make modifications to the code, they can upstream things to the code. So we built this unique sort of, I would call, community source license concept. It's actually quite cool. It's pretty novel. Like, I don't think anyone's done it before. Where basically, if you want to launch an L3, it's permissionless. You don't have to talk to anyone. You don't have to pay anything. And the thought process behind it is, and you can make any changes you want, right? So you can do whatever you want to the stack. And the thought process is it has natural alignment with broader Arbitrum stuff, which is it settles the Arbitrum 1. It has, transactions that settle as bridging, has all of these sort of hub and spoke like business model components. And that was where the Arbitrum DAO had started, where it was permissionless to launch an L3. If you want to launch an L2, you need to have permission from the DAO. And the DAO came together and realized like that was a little bit restrictive in the sense that the goal is not to stop people from building whatever they want. The goal is to enable people to build whatever they want. And we want to remove the frictions of allowing people to build whatever they want. But how do we do that in a way that still aligns with the Arbitrum business model, right? And the business model allows, so the new version, which is the one that exists today, is you can launch Arbitrum technology anywhere. If you launch it on top of Arbitrum 1, you don't have to pay anything. If you launch it on top of L2 Ethereum, like Ryan said, if you launch it on top of Base, you can launch it, I think, even on top of OP mainnet. I don't know if anyone's done that. We've got people who are testnet launching on top of Barachain. We have people who are launching on top of Ton. You can launch the tech stack anywhere. And if you're going to do anything other than launching an Arbitrum 1, and it's permissionless, you can do whatever you want. You have to pay 10% of like your profits. So the goal is like, how do we let people do whatever they want? Have them naturally align with Arbitrum. And again, this is one of those sort of distinctions I would say between Superchain versus Orbit. If you're launching Orbit anywhere, whether you pay 10%, you don't pay 10%, you're part of the Arbitrum family, right? You're eligible for grants, you're eligible for incentives, you're eligible for investment, you're eligible for growth, all of these things. Because the way we're really thinking about growing the Arbitrum ecosystem is not let us invest in you and get like a sequencer share back. It's how do we expand the economic zones of opportunity for Arbitrum to take advantage of. So for example, the Arbitrum DAO, and you know, it's been a lot of talks about whether this has been successful or not. The Arbitrum DAO launched, and it hasn't deployed any capital yet, $220 million gaming fund. It's actually an extremely interesting and unique concept. The sole LP, and there's been a ton of legal work, the sole LP of this is the Arbitrum DAO. It's like literally the DAO is the LP of this multiple $100 million fund. And they're going to be deploying at investment and grants, and there's a whole component of that into gaming. And their mandate is not grow gaming on Arbitrum 1. Their mandate is, what is the economic zone of opportunity for Arbitrum, and how do we add leverage to builders? So they're getting deal flow from teams like Zai. They're getting deal flow from Apechain. They're getting deal flow from teams that are launching, like Geist launched on top of Base. And it doesn't matter, right? Because the business model is, how do we take the Arbitrum DAO, the assets that it has, and turn that into leverage for people building on top of Arbitrum? So yes, like you can be an L3 and you don't pay. You can be an L2 and you pay 10%. And the goal is like not to monetize that way. It's to have alignment with everybody using the technology and then add leverage. And I think it's a very different model. It's the way I like to think about my vision for the Arbitrum DAO is it's a digital and decentralized sovereign wealth fund, right? So you have natural resources, which is the Arbitrum block space. You want that block space to be everywhere, and you want to make sure that that block space and that use case can have as much leverage as possible from your ability to add for it to have success. So
AJ, how much is that 10%? Like you're going to spend 200 million across all these different gaming, L3s. Like what does that revenue look like from the 10% profit?
10% is pretty
Is it
minimal.
that sequence of revenue? Is it there? Like when you say profit, is it like if it's a game in the NFT sales, are you participating in that revenue?
So the 10% is the sequencer profit, right? But
okay, so for an L3, so it's basically you're not getting anything for these L3s.
Well, you are in the sense that like they settle, and a lot of them launch tokens on Arbitrum 1, and then they have like cross-chain bridging. So for example, Zai has probably done like 10 million transactions on Arbitrum 1, even though it's an L3 chain on top. So you do get some of it.
What does that look like? How much is that kind of generated then for you all in revenue?
I don't know the number off the top of my head, but the point is it doesn't matter, right? Because like the gaming fund doesn't care about transactions. The gaming fund is not trying to say, we're going to give you money to get more transaction revenue. They're investing at the application layer, right? So what's exciting about like Zai and Apechain and all these other chains is let's get alignment to have the Arbitrum technology exist everywhere. And then let's add leverage to your business, right? So if you need to invest $10 million and you're looking at all these different venture funds, why would the Arbitrum DAO, want to be able to invest in the winners that are building on its technology? Right. So like it's a very different model of where we're concentrating capital. It's not concentrating capital to get them to use Arbitrum technology for the sake of sequencer revenue. It's concentrating capital. Like, how do we get people to use Arbitrum so that we can invest at the application layer, at the product layer, to be able to make Arbitrum continue to grow and add leverage, right? So if you just look broadly at the Arbitrum DAO, again, like $200 million game fund, it's the sole LP. Right, they're building out. They have the Arbitrum Step program. The Arbitrum DAO owns like $40 million in U.S. Treasuries through different like money market funds that they've done. Right, like the foundation, and this is separate from the foundation. It's the Arbitrum DAO itself building out all of its assets through like diversified opportunities to continue to add leverage on top of Arbitrum builders. So it's, again, I think it's a very different model, which is like, we want the block space to be everywhere. We want to make sure that like we don't have quote unquote freeloaders, but we can have like alignment and value capture. But the primary business is not actually capturing sequencer revenue. The primary business is going to be long-term. How do we expand our economic zones to continue to invest in the builders who are using the Arbitrum technology?
And AJ, follow up there. I like the mental model of a sovereign wealth fund, and a lot of the ethos behind crypto in general is the separation of money and state. And so to think that we can opt into these economic zones at our will and not the ones that we're born into geographically is empowering. Ryan mentioned that the Superchain, it has this 15% of the sequencer, and the primary reason that L2s are opting into that revenue share program with the Superchain is for interop and the deeper level of interop between the Superchain rollups. Is that a similar reason why someone would choose to pay the 10% in the Arbitrum ecosystem? Is it for a deeper level of interop? No, it's for something different.
The way we think about interop is we need to work and build out our interop strategy for the sake of the value proposition of the block space, right? Because we want people to be just using the Arbitrum technology, like I said, just expand economic zones of opportunity, right? So I'm not trying to sell interop to monetize interop. I'm trying to have interop be there to make the product as good as possible so that we can continue to add leverage and people want to use it, right? So right now, like, why do people like using the Arbitrum technology? They like the stack. They like that it's flexible. They like that they can do whatever they want with. I would say today, and it's a pain point across all of them because none of the interop strategies are live yet, the pain point, they're like, well, the Superchain's really public about their interop strategy, right? So Arbitrum's probably been less public about it. We're probably, maybe technically farther behind. We've definitely been working on some stuff, but it's not the primary focus of the business, right? And I think that's like a really core difference with how we've been evolving the businesses between Arbitrum and Optimism, where Optimism is like, this is the way that, like, this is the value proposition we provide, right? With Arbitrum, that's just a way for us to make the product really good so the business can be built on top of it. Because if we don't innovate at the product level, people are not going to be excited about using Arbitrum block space, which means we have fewer economic zones of opportunity, et cetera, and obviously it gets small.
Yeah.
Thanks for unpacking this, guys. I think that this is just really important kind of philosophical differences in how you both view the world and how it's evolving. AJ, I did just want to clarify and touch back on one thing. So the 10% of chain profit, that is for L2s launching using the Orbit stack, right?
Yes.
That's L3s. There's no explicit payment. Like
L3 is not settling on Arbitrum.
Yeah, so if you want to run an L3 on base, then you pay the 10%. If you want to run it on Arbitrum 1, then you don't pay anything. So again, like, I would say a simple way to, like, for the audience to understand that is, like, Arbitrum and Optimism both have like freemium models, right? So the OP freemium model would be like OP stack, like what Blast did.
Yeah.
And then the premium model, where you can get access to all of these different things, is Superchain. On Arbitrum, you can launch an L3, and that's free and it's permissionless. So you can do whatever you want to the code. Or you can launch an L2 and pay the 10%. What I like about our model is that because, like, the majority of the focus of quote unquote the business, and I think the value driver back to the DAO, is expanding these economic zones of opportunities, we're kind of indifferent between the two, right?
Yeah.
So, like, that's, I think, like a really nice point, which is like there's like hundreds of Orbit chains. And I spoke yesterday with an Orbit chain that's on base, right? And like we can like leverage their business and we can help provide value to their business. And that's like, for our perspective, that's great. But that's because our business is not sort of tied to a restrictive interop model as like the core value prop of what we're trying to offer.
And so,
yeah, and you guys don't even really have any L2s, do you? Like, how many L2s are even using Arbitrum?
Yeah, there's a bunch. Yeah, there's like, I would say that it's probably like a 70-30 split between L3s versus L2s. Yeah.
What's the biggest L2 for using Arbitrum?
The biggest L2 right now using Arbitrum, that's in terms of like revenue that's been returned, I think so far has been Galaxy. Then Kinto's launched an L2.
Gunter.
Plume is launching an L2. EBI, a PerpDex, they're an L2. So there's a bunch. There's like maybe like 15, 20 at the L2 level. And there's at the L3 level, probably like 70 or so, right?
Yeah.
Ryan, you all kind of invented, I think, correct me if I'm wrong, this idea of chain profit sharing. And that, I think, came about with the base deal. Can you talk us through a little bit what those considerations looked like and what the different knobs were that you all were trying to turn as you negotiated that deal? And the base deal, I think, ended up being that they would contribute back 2.5% of overall chain top line revenue or 15% of net profits to the OP collective. And that is, I guess, now the kind of boilerplate that you have across all chains.
Yep. Yeah, look, base was before my time, but it was a 5-year deal. It was the first of its kind to showcase, horizontal approach, of getting other people to use OP Stack, and was a big shift for Optimism at the time. They're 2 years into that deal, right? I think a lot of that deal, we've structured deals way different now, right? Where we want to give some, like if you look at Kraken, was like a 25 million OP grant, and 5 million was upfront, and we wanted them to start participating in governance. They get tokens, they're contributing to the OP stack, and so they're like immediately adding value from a protocol engineering perspective. But then there is a lot more now as far as they're opting into their commitment to Interop and key handover to Security Council. And, it looks way different because, 2 years ago, we didn't have kind of the vision that we have now of what the Superchain looks like and exactly how we want it to play out. So Base really was a great first mover. They've been phenomenal. Like the contributions they've made to the OP stack have been amazing. The value that they've brought, I think if you look at their sequencer revenue, it's probably 10 to 15 million in USD that they've generated in ETH relative to the deal. That's like not like how you would look at that deal. It's a very like Web 2 way of looking at the deal. The ecosystem effect, the broad value that they have created for Optimism ecosystem and the collective, the partners that have knocked on the door because they want to be in the same cohort as Base. It's really hard to like totally quantify the incredible value that they've brought in the Optimism ecosystem. I don't think there's and they've been, I think, even Jesse would admit like they've been wildly successful beyond what they would have ever thought in their first 12 months. Maybe wouldn't say that because he's very, very aggressive. So yeah, it's been great, right? Like it's been great. We learned a lot. There's things, I think both sides of that, if we could go back 2 years ago, I think both sides probably would have done different, made different changes in that deal, but that's okay. That's like part of the exploration of this space, and we have a good relationship with them, and they've been really fun and collaborative and helpful. And I think Jesse's been a great messenger of the Superchain messaging and what it stands for. And Hayden has been now as well with Uni. So like going over to, Uni, I think really gets this application interop, Uni moving from let's deploy everywhere to like, let's have a chain, and how do we bring liquidity into that chain is going to be really exciting, and excited for their launch that's coming up soon. So yeah, it set the tone for the direction that we've been going, and it's been fun to work with them.
Yeah, thanks for sharing. And again, I think that in many ways that deal, you must have had to draw inspiration from other models of negotiations, et cetera, because it's quite rare, I think, to see these types of deals being struck in Web3, where everything is just so open, composable, free, open source. We'll figure out the business model later. But I give you guys a lot of credit for doing the hard work of probably slogging through a bunch of different approaches and coming to one that clearly is working and is net positive for both.
Like even people like Proto contributing, to like, reduce it. Like we basically contributed to reducing sequencer fees, right? Like our team helped do that. So like we even did that knowing that was like
too ironically with Prism.
Yeah, which is crazy, right? Like it's great, So like we did that even if it went against that like the short-term business model right now that we're leaning in is like sequencer revenue. It's like, but that there are things that we want to do for the greater good of Ethereum, and I know we didn't get to talk about Ethereum alignment, but like definitely Arbitrum and Optimism. For any differences we have, we are all in on Ethereum and making it better and like coming together, which has been awesome. And so yeah, we're gonna have to keep iterating. What worked 12 months ago isn't gonna work 12 months from now, and like we're gonna keep it moving.
What would you each say to the folks who are saying that, oh, all of these L2s, what Optimism's doing, what Arbitrum's doing, it's parasitic to the L1. It's not Ethereum. They're trying to build their own kingdoms and take away from Ethereum. What's your response to that?
I'll go first. I think that I think what people do they're conflating two things. One is, and I actually don't think it's the right decision, but that's like a whole other debate. They're conflating whether the L1 should scale and whether people on the L2 should build businesses on top of it. The reality is, I don't think anyone thinks that there's going to be one blockchain in existence that will solve all of the world's problems. And I don't even think that's a scalability issue. I think it's also a product level issue, right? Because people don't want uniformity of block space. They want opinionated block space for certain use cases, right? So if you don't have the ability to launch your own blockchains on top of Ethereum, then you're going to just have builders launching their own blockchains elsewhere. And I think that in some ways, I like to say everything in crypto is about time horizons, right? So if your time horizon is who's going to win in the next 6 to 12 months, I understand the concerns and frustrations and hesitations about Ethereum's roadmap when you look at all of the traction that Solana's getting. And I think it's great. I think Solana's been doing a fantastic job of what they're trying to accomplish. But if you're thinking on the 5-year time horizon, I think that even in the Solana ecosystem, when they talk about network extensions, etc., they sort of see the writing on the wall on this, is that Ethereum is very well set up to be able to enable opinionated block space, modular block space, while still maintaining itself as a critical sort of bedrock of all of this. And again, I think that whether Ethereum should be in the short term making certain scaling decisions to maybe quote unquote keep up is orthogonal to this broader question of whether L2s are parasitic, and I don't think they are. If you look at even from a business development and education perspective, I would argue that Arbitrum, Optimism, Polygon, and other L2s are actually the forefront of getting people to use the EVM. If you even think about it at this point, the Ethereum Foundation, for all the criticism they get, they don't have the resources to do what all of these organizations are doing individually, right? So I think it's that's what I would say.
Yeah, I mean, I don't have much to add. I think that's very eloquently put, and I agree with all of that. I think a lot of it is time frame conversations. Right now, you have a great user experience on Solana because there's not many users, right? So you get these instant confirmations. It's a great place to actually interact from a user, and a user journey in the Ethereum ecosystem is complicated to say the least. But over a period of time, when we're are we going to get 500 million, a billion people using the ecosystem? You're not going to have one chain, in one ecosystem, be able to do that. And so there are things hopefully that Ethereum continues to do over the next couple of years that help still solve some of these problems. But no, I think in the end, when we look back 5 years from now, everyone that's bullish on Ethereum will be very grateful that there were these L2 ecosystems that help scale it.
Yeah, absolutely agree with that, as well as AJ's points there too, because you guys are ultimately pushing forward two visions and value propositions that I think Ethereum is trying to push forward itself. You have Ethereum trying to expand its economic zones via rollups. Then you also have Ethereum trying to deepen its interop between these rollups. And so each of you guys respectively are pushing forward these two paths in your own right. And ultimately, Ethereum is going to be better off by learning from you guys, drawing upon your tech, drawing upon your inspiration and your vision, your philosophy. And ultimately, Ethereum in general is going to be better off. So yeah, as we wrap up, guys, really appreciate you guys, unpacking why you guys are building your businesses in this way and talking through some of the decision-making process that has led to you to where you are, which is two of the biggest rollups on Ethereum.
Thanks for having us. It was fun. We'll do a recap a year from now and see where we're at.
Exactly. Yeah. I'm sure everything's going to change.
Yes, that's the only thing I'm certain of. Yeah.
Well, thanks so much, guys. Thanks again, Robbie, for letting me be your sidekick on this one. And I learned some things, and hopefully everyone tuning in did too.
Definitely. Thanks, Jill.
Thanks
everyone.